Bitcoin's roller coaster ride continues. After a brief surge, the cryptocurrency has retreated, leaving investors on edge as they await crucial inflation data. Will this data trigger a comeback, or is more turbulence ahead? Let's dive in. On Wednesday, Bitcoin, BTC, experienced a setback, reversing its earlier gains and falling from a high of around $114,000 back to the $107,000 to $108,000 support zone. This 3.5% pullback has traders watching the upcoming CPI report with bated breath, hoping for clues about the market's next move. The Consumer Price Index, CPI, report, which was delayed due to the U.S. government shutdown, is now scheduled for release on October 24. The consensus forecast anticipates a 3.1% increase. However, what's particularly concerning is that the CPI has been steadily climbing for the past 6 months, even as the Federal Reserve has begun lowering interest rates. But here's where it gets controversial. The recent price action of Bitcoin seems to be following a pattern. The last 3 CPI releases have coincided with local tops, following bursts of bullish sentiment. This has led some to believe that another pre-data rally could face a swift rejection. However, the current situation might be different. Bitcoin is already down over 3.5% in the past week, making it potentially more sensitive to relief rallies if inflation surprises on the downside. Research has shown that the last 4 Fed rate cuts sparked short-term rallies in digital assets. For instance, after the September 2024 cut, Bitcoin rose 6.6% in a week, and the November 2024 cut saw a 16% increase in a week and 32% over the month. And this is the part most people miss. With gold potentially topping out and risk sentiment subdued, traders are now looking for a shift of liquidity back into crypto. Gold recently experienced a significant drop, losing 8% and erasing over $2.5 trillion in market cap. A historical analysis suggests that a capital rotation of just 3 to 4% from gold to Bitcoin could potentially push BTC to over $240,000 from its current levels. Despite the concerns of some crypto bears, the NVD Golden Cross, which measures whether Bitcoin is overvalued or undervalued relative to on-chain network activity, suggests that the bull market isn't over. Moreover, since the liquidation event on October 10, the crypto market has experienced a real shockwave. Daily BTC spot volumes on Binance have surged, indicating a renewed interest in spot trading. Here's a thought-provoking question. Could this renewed interest in spot trading lay the groundwork for a more sustainable bullish recovery? What do you think? Technically speaking, Bitcoin's 3-hour chart shows the asset is in a correction phase, testing support near the $112,000 level. The projected trajectory suggests Bitcoin is trying to find support in the $110,000 to $112,000 zone before potentially rebounding toward $117,000. If Bitcoin can hold above $108,000, the path of least resistance appears to target the $117,000 level first, with potential to retest the previous highs near $126,000 if bullish momentum returns. A breakdown below $106,000 would invalidate this bullish scenario and could trigger further downside pressure.